G'day and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us as we get going this week here at Ausbiz. Let's take a look at where we finished. On Friday, cooler than expected US inflation data, seeing Treasury yields fall on the prospect of interest rate cuts, while Wall Street's main indices gained, although the Nasdaq did struggle to make headway as tech shares remained under pressure from fears of disruption by AI. Now for the week, the Nasdaq lost more than 2%, the S&P was down 1.4%, the Dow down around 1.25%, their biggest weekly losses since November. Mega cap tech stocks were weak, with Nvidia and Apple being the biggest drags on the S&P 500. Applied Material shares surged after the chip-making equipment maker forecast second quarter revenue above expectations. The healthcare sector among the best performing, with Dexcom rising along with Moderna after both companies' fourth quarter earnings impressed. Networking equipment maker Arista Networks gained after forecasting annual revenue above expectations also. Well, US inflation increased less than expected in January as fuel and rents fell, but households faced higher costs for services. The consumer price index rose 0.2% last month to be up 2.4% for the 12 months, excluding the volatile food and energy components, core CPI increasing 0.3% for the month. Now, following that data, FOMC member Austin Goolsbee said, "I think rates can go down more, even several cuts more from where they are today, but that's conditional on getting inflation back on path to 2%. Well, US Treasury yields dropped as that cooler than expected inflation data was released, boosting bets that the Fed will deliver at least two more rate cuts in this cycle. The US 2-year Treasury yield fell to 3.4%, the lowest in 4 months, the 10-year down to 4.05%. Australian 3-year government bond yields, they fell to 4.25%. Oil prices were slightly higher on Friday following the inflation data, helping offset supply concerns as OPEC Plus looks to a resumption in production increases, when crude futures at just shy of $68 a barrel. The gold price rallied on that softer than expected US inflation data, reigniting hopes for rate cuts. Spot gold up around 2.5% at $5,040 an ounce. Copper was up, iron ore unchanged at around $99 a tonne. Well, let's now get across what we're seeing on global markets with a focus on New Zealand. Matthew Goodson joining us from Salt Funds. Matthew, welcome back. Let's begin with what we saw on Wall Street. So obviously that positive inflation read, raising expectations, the Fed may be in a position to cut, but those tech stocks remaining under pressure.
No, a couple of interesting things going on there. The inflation number in the US was good, but if you look at the components that feed into the PCE inflation number, which is what the Fed focuses on, are still a bit high. So, I think there's ammunition there either way in terms of their future decision making, and we're just going to need to see further data. And then the other key thing, obviously, is the AI fair trade continues to bounce around markets. We're starting to see some pretty indiscriminate price action, and our expectation would be you'll start to see investors think a little bit more carefully in the near future around which companies really are at risk versus those for whom it may even be a cost benefit. So, I think it'll just become a little bit more discerning as time goes by.
Do you think that's becoming a little more obvious in terms of those winners and losers that are emerging from AI?
Not yet, but we're starting to see some ridiculousness. So, for example, the ex-Florida karaoke maker that announced a supposed transport AI-powered engines, dropped a lot of the US logistics sector by 10 to 15% a couple of days ago. So when you see those sorts of reactions, you have to be getting close to peak fear.
Yeah, I mean, the number of sectors that they seem to take it in turns each day, depending on how you're likely to be affected by that AI transformation. However, I see perhaps in New Zealand, look, obviously not a lot of exposure there to tech. Nonetheless, you seem to be fairly immune from that.
Yeah, that's right. Really, one of our largest companies, Infratil, which clearly owns CDC Data Centres, if anything, is perceived as a marginally positive exposure to it, so long as they're earning their cost of capital on the centres that they're building. But other than that, look, very little in the way of software exposures in our indices. So yeah, certainly not the same noise and volatility as what we're seeing in Australia.
Matthew, how have you got underway to begin the week there?
Quite a busy Monday morning for once in New Zealand. Result season's underway. So we had A2, which was a slight beat, albeit merely inline infant formula in terms of their core business. But it does have a very volatile investor base. So they've taken the stock up around 9% as we speak. So that's certainly a very positive start.
What do you just on? Sorry, just to interrupt you there. Obviously, it's listed over here as well. We know how subject it is, particularly to the Chinese market. What's the outlook that A2 is expecting?
Look, I think for one area they've just shown a little bit of extra progress in areas like adult nutrition. So clearly they're trying to broaden the end market, for their formula products, and that's one area they've been looking to drive, but it's still tiny relative to everything else. It's infant formula is the main game here.
All right. Elsewhere, beyond that, what other results are you watching?
Good solid result from Freightways, which is a real bellwether for the New Zealand economy. Result that looked a fraction below, but when you adjust for various one-offs, it looked pretty much bang in line. So the market received that well, and it's up 1% or so. And the outlook comments appear to be fine. So yeah, right now it's trading up 1.2%. And then the final thing that was interesting is Contact Energy in trading halt at the moment, pending a $500 million capital raise to fund a number of generation expansion initiatives. Slight surprise is at their November Investor Day, they'd suggested they didn't need to raise. And when we look at what they're doing, they probably could have done it all on balance sheet, but clearly they've opted for a conservative capital structure.
Now, another company I see you got your eyes on, Fisher & Paykel Healthcare. So, look, this has been affected certainly by the US tariffs. How's this playing out for the company?
Yeah, I mean, FPH has been very well placed as they've had a lot of their production in Mexico. So under the US-Mexican, Canadian Free Trade Agreement, they've been able to sail on largely unaffected by all the tariff noise. But now last week it emerged, President Trump suggesting, the US may look to review that or even walk away from that at some undefined point. So one never knows whether that's just playing games and gamesmanship, ahead of renegotiations, or how real it is. But that's been enough to just put a cap on FPH in the short term.
All right. Overall, I mean, when we take a look at this side of the ditch with reporting season, pretty much playing out how last reporting season did, in that those companies that have done well have been handsomely rewarded. Those that have missed have been severely punished. Are you seeing that your side as well?
I wouldn't expect the same volatility here, but certainly in Australia, what we've seen so far is very significant reactions to quite small beats or quite small misses by companies. So that suggests that any small difference to current views has been taken right out, extrapolated right out into the future. So ultimately, that creates good opportunities for active investors, and something we'll look to take advantage of if we do see some good overreactions this result season. But certainly in New Zealand, we wouldn't expect the same degree of reaction as what we're seeing in Australia.
Now, Matthew, on the macro front, the Reserve Bank of New Zealand making its interest rate decision on Wednesday. What are the expectations?
Everyone thinks they'll be on hold at 2.25. That said, recent data has just been a tad uncomfortable in terms of inflation expectations. For example, are running around 3.1. So while inflation's coming back here, it's perhaps not coming back quite as quickly or as far as they might like. So I think a real view has formed that their move to 2.25 was a bridge too far, but now they're there and they're a bit stuck. So it's going to be fascinating to see what they say and how they try to manage investors' expectations. But certainly if you look out 1, 2, 3 years along the swap curve, at least a couple of hikes are now being priced in. So the market's already there if the RB did decide that they had gone a little bit too far.
Yeah, that's interesting because obviously we saw how the narrative changed here very dramatically for the RBA with that 180-degree about face on rates now, of course, having hiked. That interest rate cutting cycle proved to be quite shallow. So is there perhaps likelihood that that could play out on your side as well?
Yeah, I think there's two very different central banks. The RBA possibly hasn't been active enough, probably never raised enough post the COVID boom. So you've had an extremely strong, even overheating economy in Australia, which has used up all of its spare capacity, whereas the hyperactive Reserve Bank raised too much, cut too much, raised too much, and now possibly it may have looked to have cut a little bit too much again. So, it would be lovely if they could just sit tight for a year or two.
Yeah.
But we really would need to see inflation numbers just come back a little bit quicker than what they are for that to be the case.
All right, we're watching out for their commentary on Wednesday. Matthew, great to get across what you're seeing there. Thanks for joining us in Salt Funds.
Pleasure. See you.
Well, let's focus on the local market then as we get underway on this Monday. Looking for a positive start, in fact. Going certainly a long way to wiping out some of those losses we saw on Friday. Will we eclipse the 9,000 point level again this week? That may well depend on those earnings results, many of them coming our way as well. We'll get across that very shortly when we get to the open. Stay with us.